All right, today we're going to be going over one of our weekly strategies, weekly chart strategies for options. It's not something I've shown at the meetups in the past, so this will be a little bit different, and we'll talk about who's been trading these strategies versus the daily. Let's first go through the disclaimer. Anything we're talking about today is for educational purposes only. We're not giving any specific trading advice. What we're showing you is how myself and Becky, who's my trading partner, she's also the co-host of this meeting, how we approach trading the market and how we profit from trading options and futures a little bit over many years now. And our approach to trading hasn't really changed that much in all these years. All right. These are the markets which we trade with options. We chose this set of ETFs because it gives us a very diversified profile of things to actually trade. Also, this particular listing of ETFs, now there are probably about 1,000 different ETFs, okay? But not all of them have enough option volume and open interest for us to trade with options. If we were just buying shares, we have a lot more we can choose from. But these give us enough options, puts and calls, to be able to trade effectively. So that's why we chose this specific list of ETFs. And price-wise, there is enough diversity in the price of the options to accommodate most traders. So traders who have smaller accounts, there are options they can trade here. And traders who have bigger accounts, well, they can trade whatever they want, but there is not enough choices here. So even if you have a smaller account of a few $1,000s, you can still be able to trade and profit from these strategies using this list of ETFs. And this is a strategy we're going to be going over. But first, let's take I'm going to switch over to the charts and live charts and take a look at what's been happening in the market and where we are in the big picture. So I'm going to change the share. Along the way, if you need to ask a question, just don't raise your hand. Just unmute, ask the question, or type it in the chat window. In the chat window, you'll find the link for the handouts and for all the video archive. All right, share. Okay, here we go. Okay. What I'm sharing now is a monthly chart of the S&P 500, monthly. So every candle represents 1 month of time. Every candle is one full month. The blue line is a 40-period simple moving average. That's a line in the sand we used for, you'll see on almost every single chart, this 40-period moving average. And this gold-colored line is an 8-period moving average. The 8 is something I picked up from John Carter and Hubert Centers. You'll find that when the market is below the 8, it'll retrace back up to the 8, retrace back up to the 8, retrace back up to the 8, retrace back up to the 8. And that's a point where you can actually find shorting opportunities. When it's above the 8, it'll retrace back down to the 8, retrace back down to the 8, and on and so forth. All right. It'll ride the 8th until it's time to drop to the next bigger support level. So this was back in 2001 when the market crashed, and we get usually two negative closes below the 40. We expect the market to maybe go lower, and it did. So these are 2 monthly closes, and it kept going down. And here we are in 2004. We're back up above the 40 and above the 8, and it pulls back to the 8 every couple of months. It pulls back to the 8, and it just rides the 8. Okay, just rides the 8-period moving average, and then it will eventually. This was 2008. The drop, couple of closes below the 40, and the continued drop down. Once again, all below the 8. 2009 was the bottom of the market. It started going back up, pulls back to the 8 again, pulls back to the 8, pulls back to the 8, and we're back above the 40. The market will periodically pull back to the 40. When it does that, that's a major, major buying opportunity for the long-term investors. Okay, long-term investors that pull back to the 40, big time long-term buying opportunity when it happens. Anywhere in this, not an exact number, but anywhere in this range is your buying opportunity. Other than that, if you're on a daily chart, like most of our trades on a daily chart, remember each one of these is 1 month. But if you pay attention to the big picture of the market, um, when you're looking at your daily chart buys and sells, when would you, if you see the market pulling back to the monthly support level of the 8, and all of a sudden you're getting buy signals on the daily chart, that's an extremely high probability trade that it's going to be going up and you make money. Okay. Here, the market's pulling back to the 8, and suddenly you get buy signals somewhere in here. You're getting daily chart buy signals. Those are the best long trades on the buy side. Okay. Here we are in 2015. It's pulled back at the end of the year, back to the 40. Major buying up. Any pullback to the 40, long-term investment buying opportunity. Back above the 8. Every pullback, look for your buy signals on a daily chart. Look for your buy signals on a daily chart. Every time the market pulls back to the 8, you look for the buy signals on a daily chart, because when we start picking and choosing which ones we want to take, the ones we want to take are the ones close to long-term support levels. So when we want to buy signal and you're trying to pick and choose, hey, if you're patient and you wait for a pullback, then you get your best trades right at the major support levels. Major support levels, long trades, major support levels. This was COVID. This was 2020. This only lasted about 3 weeks, this pullback. Realistically, it was a 3-week pullback, then one of the biggest, strongest rallies ever. Pull back to major support levels. I always talk about these during our meetups because these are major buying points. Anywhere in this, not an exact number, but anywhere close to the major support level is your entry for long-term investing. Back above the 8, every time it pulls back to the 8, you look for those buy signals on a daily chart. Those are the strongest buy signals. This, a little while ago, a few weeks ago, this was a nice red candle all the way down here. And all of a sudden, we started seeing buy signals on the daily charts. And cha-ching, those buy signals are hitting now. Okay.
When you talk about pulling back to the 40,
Yeah.
and that's that's a major strong buy signal according to your technical analysis.
Yeah.
Are we talking about buying the market, or are we talking about this is going to be kind of a stock pickers market, for so to speak? You could buy your that's the point to get into your FANG stocks, your Magnificent Seven stocks, that sort of thing.
That is when
Option
you would look for something that tracks the major indices. This is the S&P. So if you're going to do a stock, you want a stock that mirrors the S&P movement.
that heavily weighted. What
Heavily,
S&P
heavily.
heavily weights. Uh-huh.
Yeah, you want stock that move with the S&P if you're trading stocks. Now, I focus on the ETFs because I never have to worry about waking up the next day and the stock dropped 50% overnight. That was back in the day. I used to do stocks, but not anymore. ETFs, that won't happen to me. So that's why I don't do stocks anymore. I don't have to worry about those big overnight gaps that wipe out half my account or something, because that's real money for stocks. But ETFs, it might drop a few percent, but there's no big, massive 50% gap type of thing, which happens in stocks regularly. So,
Yeah. Okay.
but
Thanks.
just patience, and you just wait patiently every time you see the pullback. So it's just the optimal buying opportunity. Right now, most of my trades are probably futures because that's just regular cash flow. And probably there are 4 months each year that I focus on options. That's when I'm not doing futures, or I'm not doing as many futures. So I have a nice mix of options and futures, depending on what's going on at that time of year. Like in December, I don't trade any futures. It's all options and nothing else but options. So, and there are reasons for not doing futures in December. We won't talk about that at this meetup, but it has, if you look at my previous recordings, you might see some discussion of that. All right.
Cool.
So that's
Thanks.
the big picture. And that's where we are right now, just continuing this massive uptrend. And there's nothing in the news or anything else that's changing that. Eventually, you're going to see this pullback. Our first big Fed announcement of the year is coming up soon. And there's usually a big move after the first Fed announcement. Look at this one. This was January. Usually, a Fed announcement in January is the impetus for movement. So stay tuned for that first Fed announcement coming up real soon. Usually the market moves. Eventually the market's going to drop, drop, drop. You're going to hear the people in the news going, oh my goodness, the sky is falling, the sky is falling, that type of stuff. And just know we're in a massive, massive, massive uptrend. Periodically, the market has to pull back, and that is good because we get our sell signals from our daily chart strategies. And for the long-term people, we're just sitting and waiting patiently for that pullback. And it's like cha-ching, you just wait for your good setup. And for the intermediate term people, we have all of our daily strategies plus our weekly chart strategies. So everything is in play and we trade up and down, not just long. The edge is still on the long side. The probability of success is much higher on the long side, but we trade both long and short. Futures, it doesn't matter long or short, the odds are about the same. The way we trade futures, options, advantage long side. Larry, did you ever do puts or was it all long trades? Larry, were you doing any short trades with options or just long trades only? Still there?
Larry, you're on mute if you're still there.
And get back to him later if he's not on. All right, we'll catch him later. But Larry was only doing weekly chart strategies for a long time. Okay, let me switch back. I'm going to switch over to the weekly chart and then in a second, share chart. All right, we'll take a look at a chart for a moment here, then I'll go back to the handout. This, actually, I'll do the handout first and then look at the chart. So then that might make a little more sense. Then you can know what's in the handout. So I'm going to change the share to the handout. Okay. So this is a chart of the NASDAQ. QQQ is a weekly chart. And I have a date identified here of the week of ending October 4th, being a trade signal. What you're seeing with these lines here, trigger lines. It's a linear regression line and a moving average of the linear regression line. So the linear regression line you'll find pretty much available on almost every analysis platform. The moving average of the linear regression line, you either have to program or you have to find the indicator set up for you. So on Thinkorswim, you can just program that up. I think a couple years ago, someone had created one. It was John. I think John might be on this meetup right now. I think it was John Chudnicki. He actually created the trigger line for us for toss. I think it was the one he did for toss to help us out. Because it didn't exist with the moving average, and then we got that going on Thinkorswim. And this is NinjaTrader is the platform we're looking at right now, NinjaTrader version 8 specifically. But all we're really looking for are two lines crossing. These two lines cross, and that's our buy signal. There's more criteria. I use some of Jake Bernstein's terminology, setup, trigger, trade management. The setup is the two lines crossing. That's visually what you look for. Two lines cross up or cross down. Visually, that's the setup, what you look for. And the trigger is other criteria that has to be confirmed to validate the trade is meets all of our criteria for a high probability trade setup. So and I'll go through this on the live charts in a little bit, but once we find our valid trade, I want to show you what the history looks like, and it's in the handout. This is what we call the weekly swing trend trade, and there's a version 1 and version 2 in our trading plan. And It uses all of these, same listing of ETFs. Okay. We don't do anything under 84% wins. And although for this listing shows 2024 trades valid and 2023 trades valid with this particular strategy, our actual historical listing of trades goes back to 2003, some of them to 2000 to 1999. So at least 21 years worth of data or historical trades is how we actually determine our final stats. In a trading plan, everything we do is by statistics and numbers. We don't do any guessing. If we don't have at least 84% wins looking at every single valid trade since 2003, then it's not valid. If it's 83% wins since 2003, it's not good enough. 84% wins is our minimum acceptable. I put in at least a 4% margin of error. Margin of error could be human error. It could be chart error. It could be tick error. We need margin of error because we make mistakes as humans, even what you don't even realize the charts you might be looking at are not correct. And you will never ever know the charts are not correct, and you will make decisions based on incorrect charts. That's come up multiple times. The broker says, yeah, we know it's not correct. We're not going to fix it. If I want to fix the charts myself, that includes on Thinkorswim. I was told by the folks there to use my own data provider, update the data on the desktop platform myself, and that data will be correct. But the data within their system is incorrect and will not change. But I can update my own personal data on my own computer if I want to. So be aware charts are not always correct. That's why working as a group with the people I coach, I send trade signals out each day for futures and for options. Other people doing their own review. And if there's a discrepancy, like they find one thing and I find something else and they don't match up, then wait a second, something's wrong here. Let's take a look and see what's going on. And you'd be surprised when we find it's like your chart's different than my chart. Why? So we both do historical data update and then they match. Because the data you might see at like 2 p.m. Pacific time might be different at 7 p.m. Pacific time. It might be different at 10 p.m. Pacific time. If there was a bad tick that day, and that bad tick might be there at 2, 3 p.m., it might get updated later on in the day. And so that's why it's good to be working with a group of people as opposed to by yourself, because you would never know, might never know that there was a problem. Or you think you made decisions based on certain information, and then you go back and look at a chart and you'll be like, wait a second, I could have sworn I got that number right. But now you're thinking, no, the charts changed. Charts literally changed, and you just didn't realize it. So it's really good to have a group of people you're working with, and so you can um, have someone to bounce that off of to make sure your charts and your trades are okay. But this is just this strategy alone, swing trend. Over the last 2 years, for swing trend one, 92% wins, swing trend two, 93% wins. I think the one we're looking at right now is actually swing trend two, but this is all on a weekly chart only, not daily charts. So the difference between weekly charts and daily is that it updates once per week. You do your work on Friday on the weekend. You place your trades Monday morning. During the week, there's not much else to do till the next weekend. If you want to trail stops and do other things, that might come up during the week, but you could basically get into trade Monday morning and then go live your life till the next weekend. Once you have a position of whether calls or puts, you put in a conditional order to sell so many contracts when the first profit objective is reached, and walk away. Nothing else for you to do. Okay. And we have very set rules for option pricing, how much time to be in an option. There's no guessing. We know if an option is too expensive, we always trade in the money options. There is no situation where we would buy out of the money options. Okay. Always the first in the money option. And time-wise, it's going to be 1 to 2 months worth of time, depending on the situation and certain business decisions we make. But anyway, this is just this one strategy, the swing trend 1 and 2 strategy is a group of, it's two strategies in basically one packet, so to speak. So the swing trend trades. This is 2 years worth of trades. And when you look at it like this, you're like, when you have 40 wins, 41 wins, and 3 losses, you better be able to make money. And if you're not, then you're doing something really wrong. And that's why you have to talk to me as the coach, because sometimes people do things that they know are wrong, take losses, and they're kind of embarrassed to like talk to me and let me know that they need some help because they're embarrassed that they took losses that they shouldn't have taken, because they took trades they shouldn't have taken, jumped into things that they shouldn't have. So always talk to me. If you mess up, let's figure it out. And because part of trading is also such a mental game. The technical part for me is easy. The mental part's always an ongoing challenge. But this is the kind of numbers we look at when we follow a plan with rules based, what price to enter at, what our profit objective is. And this is representative of pretty much all of our trading plans and how we go about placing trades. We have to have these numbers, got to have these numbers, because if this was a lot lower percentage, like under 84, it could be 70 something, we're going to pass. We're just going to pass. It ain't worth trading. Wait for your good setup with a high probability of success, and money comes. If you make a mistake, get out of your mistake and start over. Don't let a little mistake become a big mistake. Been there, done that. I know there are people on this call right now, or the Zoom meeting right now, that have been there, done that. They thought they made a mistake and thought, well, when I get back to break even, I'll get out. They never got back to break even, ended up taking a full loss. All right. So it's better take a 10, 20% loss on a mistake than take a 100% loss for being stubborn and not wanting to like cut your losses if you make a mistake. So I'm going to switch back to the charts. If you have any questions, just once again, just go ahead and type it in the chat window or unmute and ask. I'm going to switch back to the charts, and now we'll stay on the charts for a while. All right, this is the cues. So on the handout, I used the example October 4th. I'm going to go back a little bit so you can more clearly see when this top line crosses below the bottom line, the space in between creates a cloud looking type. It's not like it's like an Ichimoku cloud type of thing, but it's just the moving average crossing over the linear regression line. And it creates a bearish trigger line cross. And when it crosses back above the linear regression line, it creates a bullish trigger line cross, and in the space in between is colored in. So yet extra visual that here we're in a bearish cross, here we're in a bullish cross. Just here is the simple, quick visual for swing trend number 2. Crossover, buy, cha-ching. Crossover, buy, cha-ching. Crossover, buy, cha-ching. Crossover, buy, cha-ching. However, this is a no-go trade because this 40 period moving average is decreasing. This particular strategy is a trend trade. The 40 has to be increasing on when this happens. Still a good trade, but we're going to pass on it because the 40 is decreasing. We might have short opportunities, but not the long trade. Crossover, cha-ching. Crossover. This would look like it's going to be a loss. It went up for a week, didn't hit the first target, and came back down. However, our first target was reached 2 months later. On this is expiration week in June. 2 months later, our first target is reached. Now, there might be time decay. If there's a gap, maybe not. Trades like this, you don't expect to get, it may not be net profitable, but it might be 10, 20% loss on option value. But if it gaps, I've had trades like this that I thought was going to be a 20, 30% loss, ended up being a 20, 40, 50% profit because of gaps. So we can't predict option pricing because of gaps and speed of markets and stuff like that. So we just put our trades in, put in our targets, and we would have hit the first target right here. And the ATR of this week, which would have been the valid trade week, is 14 point. Look at the data box here for ATR, average true range, 14.87. A percentage of that is represents how big our first target is. It's going to be about 9 or 10 points is going to be how big our first target is. This first week, it would not have hit our first target and it went against us. Now, here's a good example to actually look at. Our entry price for this trade would have been the open price the next week at 336.04. We get into the trade this week at 336.04, right at the open or lower. Didn't hit our first target. Let's say our first target was 9 points. Then it's going to be in that neighborhood. The open is 336.04, and it went as high as 342. So our 9 point target wasn't hit. It would have been, the target would have been if the open is 336, the target would have been 345 in that neighborhood. That didn't get hit until this week. The reality is if this might end up being break even or maybe a 10-20% loss after 2 months of time. Because it took till literally expiration week to reach a target. Now, I always say 10 different people taking this trade will have 10 different results. This week, not everyone may have been able to get in at the open. So they got to the trade later and it's already started moving, so they think they missed the trade. So they don't take place any trade. They missed it. They were like, yeah, it moved without us. Because the entry was at the open or lower, but already started moving, and so they missed the trade. But guess what? At the end of the week, the target's not reached yet. Trade's still in play. This week, the market came back down to the entry price, which is the open price from this week. Valid trade week. Place the trade at the open of this week. But if you, for some reason, you miss it, hey, the next week the price came back down. You can get in. You didn't get in this week. 3 weeks later, the price came down even lower. You can get in. You're not going to be in every single trade, but these are the best trades. It's whether you get in here, 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 or down here, there's still going to be the same 90 something percent probability we get to this price before expiration. Okay? The difference is how much money you're going to make. So 10 different people get in 10 different prices at 10 different days and times during the week or during the month. Getting in here, you might end up with, like I said, a break even or maybe a 10-20% loss. You get in here, over here, your target was 9 points. Get in over here, what's the low? 326, even lower. Get in here, your target can be 20 points. Exact same trade, but now you're getting in down here someplace and you have a 15 to 20 point target rather than a 10-point target because you're getting in at a much better price than expected. So if you got in here, you have a 9-point target, got in down here, you got like a 10 plus 9. So you have 15, 19, 20 point, you have more flexibility, you have a much bigger target. So by the time you reach this target getting hit on this week, instead of having a break even to minus 10 or 20%, now you're getting an 80 to 90% return, double your money or more. Okay? The more patient you are to get into a trade, you might miss some good trades, but you get at a better entry than expected. This one, by getting in later, this one win is going to be equal to 3 or 4 other wins combined. Okay. And because reality is you will not be in every single trade. So we always look back, hey, or maybe you're busy for a couple of weeks, you don't have time to trade, whatever's going on. You look back, it's like, okay, I'm down here right now, sometime during this week. What has been valid recently that I can still get in on? So you go look back, hit your history of trades that became valid. So, hey, this one became valid about a month and a half ago, but it hasn't reached the first target yet, then pull back. Let me get in. These are the best trades. These are the most profitable trades. The first target is still here, but your risk is less. You can still put on the same size position if you want, but or even a smaller position, but your profit is going to be so much more than expected. Your probability of success doesn't change, but your amount you're going to make has now tripled, quadrupled, or more. Okay. Any questions on just what I just mentioned, what I just talked about? I want to make sure you understand the concept of getting in on a pullback, whether intentional or just because you just happen to notice it. All right. So if we scroll back, this, like I said, this trade just happens over and over again. Bullish cross, bam, good trade. Bullish cross, good trade. Bullish cross, good trade. Is actually moving up. Bullish cross, good trade. Bullish cross is a trend trade. The 40 has to be increasing from the previous week. Bullish cross, good trade. Bullish cross, so on and so forth. Bullish cross, good. So this is, if the 40 is increasing, this I can't tell just by looking, so I look for here. 107.64, 107.66, it is increasing. So this trade is going to be a loss. This one on April 1st, April Fools, you're going to have a losing trade. This one's a loss. It's a loss if you got in here. But what if you got in down here someplace? Same trade, the same as the previous situation. You have choices. You can still keep the same target, or you can see, hey, I got in down here. I got a 60% return somewhere here. Let me just grab that money and go. Or grab part of that money and put a stop loss in. You have more flexibility on how you can manage trades when you get in at a better price than expected. All right. And it just goes on and on and on. Bullish cross, good trade. Once again, bullish cross, good trade. So this is so what I just went over for the crossover is swing trend number 2. Swing trend 1 is I'll use the same chart. Not everything is being shown on this chart. For people I'm working with, they'll get the full charts and with everything on it, with all the trigger confirmations. And I'm gonna take a look at even any of the other deals. Let's take a look at, let's see, oil, XOP, oil producers. Let's see how this looks on this chart. Buy signal, target hit within 1 week. Buy signal, target hit within 1 week, but the 40 is going down, so this wouldn't count. This one would be good because the 40 is going up. This was in November. Good trade. Oil, again, 40 going up. Good trade. Hit within 2 weeks. First target. Bullish cross. 40 increasing from the previous week. Good trade. Target hit within 2 weeks. And that's why we said this was one of our best weekly chart strategies. And sometimes just have to, some people have asked me, how do I determine trade management and strategies? Sometimes here's how I look at things. Just from, I pull back to a bigger picture and I see how things look when the lines just cross. Let's see, whenever it crosses bullish, I get a nice move. It crosses bullish, get a nice move. Crosses bullish, get a nice move. Or crosses bearish, get a nice move. And when I see visually like this, the rest becomes what trade management can I apply to capitalize on what I see. So I've probably learned about 20 to 30 or 40 different types of trade management. So then I go through in my head a list, okay, what if I manage to trade this way? What will it look like? If I manage it this way, what will it look like? Will this trade management be better if I used it to buy shares, or will it be better if I use it to trade options? There are some strategies we trade with shares that we can't do with options because options expire and the shares don't. So some of you are familiar with the share strategies, and some of those trades might last, 7, 8, 9 months before the first target is reached. In that meantime, we're collecting dividends. The S&P, we're a nice bullish cross, and it's just lasted for a while now. And yes, you can capitalize on that extra move beyond the first target with different trade management and a different strategy. So we don't just trade one strategy. With the weekly setup, we do a series of 6 or 5 or 6 different strategies combined for long and short. And I show you the website so you can download all of the spreadsheets so you can see those yourself, so you know where they are. We list the trades online so you can pull those up whenever you want. Weekly ETF share. So this is the list of the weekly chart strategies. And this is 2024 trades. You can see the long side, definitive overall advantage with the percentage wins. 95 wins to 7 losses. Okay, definite advantage trading the long side. Some people also trade short, but the advantage is on the long side. And there's certain strategies short which are better than others.
What is the chart that you're showing us?
That the
Is
chart was the cues.
I know, but I meant
I mean the spreadsheet
the,
or
the strategy
the weekly
chart.
the weekly swing trend.
Oh, the weekly swing?
Yeah, because it will look different on yours because you have Ninja Trader 7.
Yeah, I don't think mine has Ikimushi.
This is not Ichimoku. This is just the trigger lines.
Okay, I had to take a
But
look.
on you have 7, which doesn't shade in the space in between the trigger lines.
Yeah, okay,
So on 8,
that's what.
you can shade it in. So it just looks different.
Okay.
All right, so this spreadsheet is on our website, and for the daily chart trades, I also put that on the website. Let me show you that. Option. It makes it all pretty public, so you can go back and verify things. People who are trading the strategies can double check their trades. This is all the 2024 trades, and here the 2023 trades, 22, 21. So there are thousands and thousands of trades on a daily chart and weekly charts that you can go back and reference. On our daily chart strategies, this is what the numbers look like for 2024. 345 total trades, 93% wins on the long side, 84% wins on the short side. Almost, not always, but almost always the long side has a slight edge. So almost always, but not always. So all this is available to you to reference. And let me just show you
Could
the
you
website. Yeah, Olga,
could you look at IWM with that chart
on the same code.
after you're done with this?
Okay, no problem. So share and okay, so here's the website and under valid trades and the same link I posted. Here are the handouts from today from the futures meetup. And these are the weekly charts, option trades, all of them. So you can sort through these. It's a spreadsheet, so you can sort through the spreadsheet to find all of the different types of strategies. If you want to find the swing trend, you sort on swing trend and find those. It'll be the same as the listing that's in the handout, except so you have 6 years worth of trades. Like I said, we actually go back 21 years, but we at least put 6 years up on the so that you can reference those. These are the daily chart strategies. And we actually group some of these trades by just Dow, Nasdaq, and S&P, and some other groupings like the metals, energy, oil. If you want to trade just a certain sector of what they look like. But a Dow, Nasdaq, and S&P is always the best when combined. They always produce the best results. Okay, Olga, you want to look at IWM. So I'm going to switch back to the chart, same chart. Okay, IWM. Promoting. Okay, this IWM weekly chart. Same strategy. You have a specific question or anything, or last time we had one of those crosses was back here. 203s. Yeah, the last time we had a cross was July 12th, 24. Winning trade within 2 weeks. We just crossed bearish, so we got nothing going on here right now. And then we had another crossover on. When I look at, I'm looking at the values in the trigger. This number here, where it says trigger, crossing over this number. So here, the top number is lower than the bottom number, so we're in a bearish cross. And then when it crossed above, then that top number is greater than the lower number it crossed up. So it went against you for a few weeks and then cha-ching before expiration. There's usually at least 2 months worth of time. So if we trade's valid here, this is May. So we're looking at a minimum of a July expiration. Here's the expiration Friday, because the target is more than reached and exceeded before expiration date. Between this week and this week, targets hit, no problem. So is there a specific question, Olga, you want to take a look at? Okay. So,
I have to unmute myself every time.
okay.
And it isn't just pressing the unmute button. So yes, I was just my expectations is that there'll be some movement in the IWM to the upside, and I wanted to see what it looked like on your chart.
It's more sidewaysy right now.
Yeah, it's been sideways for months.
Yeah, it's been, let's take a look out of curiosity. Let's take a look at the monthly chart just for fun of IWM and share. I'm going to the monthly. It is the monthly chart. Here's still the SPY monthly, big picture. And let's go to IWM monthly. Obviously, it's not as strong a trend as the major indices, nowhere near as strong a trend. It's still going higher, but not in as definitive a trend as the S&P. So here's IWM, blah, 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 that is sideways. It's still trending up on the 8, but the 40 has flattened out. So the 40 has flattened out, so it's going to be more sideways and choppy. The 40 flattened out.
Yeah, it looks like it has to go above 240, 250.
Yeah, so it's still trending higher though. It still is, but if you take a look at our squeeze indicator,
Uh-huh.
it's losing energy.
Yeah, it is.
Squeeze is losing energy. Um and
Well, it's going up gradually, very
uh,
gradually.
yeah, but nowhere near with this
Would
force as the other ones.
definitely not.
Dow, the Dow solid uptrend, much stronger. Yeah, so the Dow, Nasdaq, and S&P are much stronger. Um, but yeah, it's still going up, but like I said, not as with as much force as the other ones, the other indices. Are you
I
an
said,
IWM trader?
Well, I just watch it because my expectations is there'll be because all the other indices have gone up almost straight up, that there will be some rotation at some time.
Yeah.
And it may not be until March when March might be the month that they lower the interest rate.
Okay.
Thank you for looking at it.
All right, cool. All right. So I'm gonna any more questions on anything? Okay, cannot see your data box. Okay, this is a message to John. Can you see the data box on this chart right now? Because it came up earlier. Theoretically, you can. Can you guys see the data box? Yes, no?
No.
No.
No. That's interesting. So there might be a little bit of a difference with MT8 versus 7.
Yeah, it should be on the right somewhere.
I have it on the left. It should be overlapping, but you can see the DIA chart, right? Right.
Yes,
Yes.
yes, definitely.
And you don't see the data box in the upper left side.
No.
No.
Okay, interesting. I'll have to work on that because I think maybe NinjaTrader 8 is dealing with it a little bit differently than 7 because usually I put the data box right in the upper left side of the chart. So anything literally on this chart screen and you put on top of it, it still shows up. Okay, so I'll think about that next time. I just chose to use 8 this time, so it works a little bit differently, I guess. Okay, hadn't realized that until I saw the comment. Yeah, to John, Zoom only picks the exact window you share. However, for all these years that we've been doing the meetups, I've done it the exact same way where I put the data box on top of the window being shared, and it still shows up as part of the presentation, as part of the Zoom meeting. It actually, the data, so this is the first time ever that the data box did not show up. So I gotta check on that and see if it's just because 8 is working differently than 7. So we'll see how to deal with that for the next time. I know this, yeah, I'll think about that for next time, as you mentioned about sharing the whole screen, because if this is going to be an issue, then we'll rather just share the whole screen. It just becomes easier. All right. So do you have any questions on any of this on this particular strategy? It's just the trigger lines crossing over. That's swing trend 2. So when we do the actual, when I go through actual strategies with you, we go into a lot more detail on criteria, setup, trigger, and trade management, exact targets, which option to choose, how much time, that type of thing. And let's see, I'm going to change the share. Go back to the handout. Okay. So yeah, everything, all the rules related to this to identify the trade. Setup is just a 2 lines crossing, real simple. And there are rules to the crossover also. So everything, it's a simple strategy, but it works extremely well. So the people who usually do the weekly chart strategies are people who don't have time or desire to spend time during the week on looking at charts and actually trading and managing positions, because they just put the trade on, they do the work on Sunday afternoon, takes 15 to 30 minutes, and then they put the trade on Monday morning and they're done for the week. So those are the people who do this. One of the guys I started training back in 2007. You heard the name Steve before. Steve learned everything, futures, Forex, options, shares, everything. And he traded everything. Steve will not come attend any other training other than with me. One day we talked him into coming to a Thinkorswim presentation up on the peninsula, but never again. He's always just trained with me and nothing else. Since 2007, he emails me every week to verify his trades are valid because he knows charts can have mistakes. But after he retired, he used to be an engineer at Lockheed. After he retired, he didn't want to have to be dealing with stuff during the week, so he wanted to enjoy his retirement and have fun, but he still wanted to trade. So all he trades is the weekly stuff. He trades shares off the weekly charts and options off the weekly chart strategies. And he's been doing that for more than 10 years now, these same exact strategies for more than 10 years now, since he retired. And this is all he does. Every weekend, he'll email me to verify what he found is the same as what I have and Becky found valid. And that's all he does, and it works really, really, really well. Just trading off the weekly chart, so you can still keep profiting from the markets, but not have to deal with stuff during the week. If you want more action during the week, then you do this and the daily chart strategies, or just the daily chart strategies. So there's something for everyone with the option strategies and the futures. I love futures. So because the profitability is there, but you got to do stuff in a more timely manner each day. So, alrighty. So let's see here. If anyone is interested in working on these with me, another question from Aaron. Are the weekly strategies only good for a week and then they expire? No. If you get a weekly, to Aaron, if you get a weekly buy like this weekend, it's the same as the futures that you're doing with me. It's the exact same thing. Until the first target is reached or expiration happens, the trade's in play. If it's a long trade and we're below the entry price, we could be below the entry price tomorrow, the next day, the day after that, the week after that, the month after that. As long as we're still below the entry price and the first target hasn't been reached, that trade is still valid and in play. The win-loss percentage has not changed. It's just that you can now get it at a much better price than expected. You can have the same or less risk, but make several more times the potential profit. That's the question from Aaron. Okay. So, any more questions? You can also email me later on, call me. I actually like to talk to people, so old school. Yeah, I like to talk. So feel free to call me, email me. It's all my email information is on the handouts and also on my website, the contact page. So my email, direct email here. This is don't text me this number. You can leave me a voicemail or call me. This is a landline phone. I usually don't give out my cell phone number except as it comes up, but that's not a cell phone. That's a landline. Let me know if you want to work with me before this coming Friday ends, because for 2025, I'll be taking 1 or 2 new coaching clients a month. I do everything one-on-one, so I only have a limited amount of time, and I need to be able to spend time with people as they come up. Right now, I'm working with someone in Dubai, so this evening I have to work with them because they're on a 12-hour time difference. And then tomorrow morning I have to work with them on a 12-hour time difference. So people I work with in Germany and Dubai, US, but I do everything one-on-one. So I need to be able to, I'm not looking for, I believe in helping people, but I'm not looking for like a full-time job, so to speak. I prefer to coach people one-on-one. And then while I really like one-on-one, I might have to explain to someone the exact same thing 3 different ways for them to get it. Everyone has different backgrounds, different knowledge bases, so they understand things differently. Stuff I think is complicated, so certain people get like that. Stuff I think is simple, people just have trouble with it. and I have to find the different words, different ways to express it, different ways to show it. So that's why I prefer to work one-on-one with people. I think I'm just more effective that way. And I can see better results. And also people have to be um, commit to doing the strategies for at least 3 to 6 months to see the results, to see the P&L. Someone I'm working with, he didn't see his net value of his account. After 3 or 4 months, his net value of his account didn't increase because he'd always been booking profits. But it takes at least 3 to 6 months to actually see, or more, to see the net value in your account actually go up, because you're going to always have positions going against you, drawing that net value down, and it doesn't start increasing until after several months. So this is stuff we have to go through. So really got to commit to several months of active trading, the strategies, commit to it with my help, and then you actually see the results start happening, and you go like, wow, this is pretty good. And it works. And so this is off from, which is going to expire this coming Friday. So I'm going to take $250 off the futures program, $250 off the options program. If you want to do both, I'll take $750 off rather than $500, $750 off the combined two. And if you want to do the full options program, this is all the daily chart strategies and the weekly chart strategies. $750 off of that. I usually don't do the weekly chart just by themselves, but lately people have been approaching me just for the weekly chart strategies. So I'll charge the exact same price as the daily strategies, but for the weekly deals only. So if you just want to do the weekly, I'll do the same exact price, but for the weekly only. All right. So that's another deal. And take $250 off of this price. So it'll be $1,500. Another question, did the BP reach target? I don't know, Olga, about the British pound, because that, since the win-loss percentage was too low, I identify the trade value, but I don't track it, look at it beyond that, because the win-loss percentage on the British pound was too low. So that's not something I spend any additional time on or do any updates on. So, but I know it was going up, but the percentage was too low for me to spend additional time on. I just identify it. I know some people will take that. I'm talking about a futures trade for the British pound that Olga asked about. So some people do take the lower probability trades, but I don't spend any time tracking those as far as how they worked out, because they won't be on our updates. I only update the ones that are over 80-something%. All right. So like I said, all my option stuff is just one-on-one. And if you live nearby in the South Bay, in the Bay Area, we can meet either in person or on Zoom. I'm good either way. There's a couple of people I'm working with right now, and we've met at least for the first 1 or 2 meetings in person, and then after that we go to Zoom. But I actually do like at least
Yeah.
one when possible. Yep. Hey man.
You ever plan to do any more groups, this big?
You mean the in-person?
Yeah, the in-person groups.
Well, I lost my ability on my places down here where I can have a meetup for free. Um, the last
Okay.
place we did was one of those spaces we rent, and it was pretty low price. Nothing's low priced anymore. So I'll put a word out there. If anyone in the Bay Area has a space they want us that we can use at no charge, basically, and they want to host us for an in-person either options and or futures presentation, hey, we're open to it. Just let us know and we can start planning something. So I'll put a word out there somewhere in the Bay Area, either in South Bay, East Bay, Peninsula. We have gone as far as like San Rafael to do some of these presentations because we've been invited. And it's hard to find people to come in person do presentations. So when someone invites us, we go out of our way to try to help people bring in, because we're local and very few people are local who can do presentations. So if you have a space, I usually don't do the pizza place because I don't believe in having to buy food um, I don't want to have to buy food or make people buy food, basically. So that's why I wouldn't do the pizza type restaurant. I just don't do that. I've been to some of those, but it's not ideal. Some of them are really set up for like the presentations. And what have people have been asking me for recently? Can I do a hybrid meetup where I have in person and also broadcasting online? And then we have to have equipment, monitors, all that stuff to do that. And it hasn't been as easy as I would like it to. But if anyone has a place that we can use, hey, let's talk. Someone actually messaged me on Meetup this past week about that, but it's a place where we can do monthly rentals, and I'm no interest in doing a monthly rental. But someone did contact me about renting a space, but it's all on a monthly basis, so that doesn't really work. But yeah, I'll put a word out. If someone has a space they want us and they can host us, hey, let me know, contact me, and we'll set something up for this year. It'd be nice to do an in-person meetup. A lot of people we haven't seen in person since before COVID. So, all right. So if we don't have anything else happening right now or any more questions, we got FOMC coming up soon. We're going to see some big market moves, usually after the first FOMC. And if you want to work with me on this, let me know sometime soon. Call me, email me, give you more details. I want to make sure that you know what to expect. You have realistic expectations of profitability. If you think you're going to double, triple, quadruple your money in 1 year, we need to chat. So I want to make sure everyone has realistic expectations, because what I give in presentations is very, very doable if you follow the rules and guidelines we present, especially with the futures. Futures is very profitable if you follow the rules. Don't follow the rules, options can be very profitable also, once again, if you follow the rules. It's hard to have a losing year with either one if you follow the rules and guidelines we present. It's always sometimes easier said than done, but that's why I'm here to help you as a trading coach. All right, we'll probably have our next meetup in about 3 weeks after the Super Bowl. So the Super Bowl is in 2 weeks on the weekend of the 9th. So probably the weekend after that is actually President's Day. So we'll either do it. Some people might be gone for President's Weekend, so we might do it the weekend after that. So we'll see. But it'll be the second half of February for our next meetup. It'll probably be futures. Then after that, another one on options. Check out the link. I'll put the link in the chat window again. All the past recordings and presentations is on the link there. And also the meetup handouts are on that same page. And on our YouTube channel has all of our videos, all our previous presentations. All right, so unless we have any questions, I'm going to get going now. And if you want to work with me on coaching, all the details are in the handout on our website also. And those discounts expire Friday night. So hopefully I can work with some of you soon, and I'll be in touch with all of you guys really soon. I'll figure out this display thing why it's not showing the data box. All right, see you all in a couple of weeks.